Welcome to the TDK12 podcast. I'm here to help you navigate the exciting world of living overseas, being an expat, international teaching, and more. I was an expat living and working overseas from 2002 until 2019. After relocating, I decided I wanted to share information I had for those people who might be looking to go overseas and those people who are already overseas and looking to make a move. So join me for this podcast, and if you want to watch on YouTube, the podcast is on YouTube with some visuals. There are links both in the podcast show notes and on YouTube. Please subscribe and hit the like button if you like this. Let's get started. Welcome to episode 5 of the TDK12 podcast. This is a 3-part series called Understanding the Package. We're going to review everything you need to know about money, benefits, and savings so that you can make a good decision when you're offered a contract. You need to be able to make apples-to-apples comparisons between schools and between what you're going to earn, what you're going to save, and how you manage that money after you get it. The first thing we're going to talk about currency. Now, currencies are something people take for granted and they don't look into. So they might do a currency conversion and feel really confident and say, oh, I'm going to make $60,000 a year, so that's fine because they're a U.S. citizen, or they might say I'm going to make $75,000 a year because they're a Canadian citizen and they've converted it to Canadian dollars. But you have to look at the full scope to actually understand what you're going to save and take home from that salary. And you have to look at the average that you're going to generate per month. And it can get pretty complicated. So we're going to start slowly, and we're going to kick off with the different types of currency plans that are out there. There could be more, but these are the most common. First, we have the fixed plan. In a fixed plan, you have something like the UAE dirham, and it is pegged to the US dollar. That means that the volatility of the dirham and the dollar go together. So the amount of dirhams you get per month should be closely related every month to how many dollars you can get for those dirhams. If there's high inflation or something and your dollars don't buy as much, that's something you can't control. But if you're told, for example, that you get 10,000 dirhams a month, then that's going to equal roughly $2,722 today. Now, that might change a little fractionally, but it's not going to change that often or enough for you to really worry about. This site is called xc.com. I'll link it in the show notes. I use it all the time to research currencies. This, once you put the currency in, will give you a chart. And a chart for the dirham to the US dollar looks like this. Notice I've gone down to 5 years. You can even go to 10 years. You'll notice that here there was kind of a steep drop, but overall this is a very stable exchange rate. So if you took a job in the UAE, you know that the value of your money should hold if you are using the US dollar as your home currency. So if you're not using the US dollar as your home currency, you need to do this for the currency that you're using. And you can see against the British pound, there's been a lot of volatility. There's points where if you were working in the UAE and you were British, you were making more money when you converted to the British pound than you were at other points. And that's what's important. You really need to look at this overall range and see if the currency is stable against your home currency. Next, we have the local currency plan. It is very common for many schools in China to pay you in Chinese renminbi. Renminbi is a fiat currency with rates that move. That just means it is a normal currency, it's not pegged to anything, and it is subject to multiple factors within the market. There was one point when I was working in China where I was losing around 8% in a year because of currency fluctuation compared to 2 years before. At the same time, I had some friends whose home currency was the British pound. They had gained like 12%. They were literally able to pay off mortgages faster than they planned because of the fluctuation. Third type of plan, the split currency plan. These are great if you can get one. In my opinion, um, these are absolutely the best if the school offers them. So in this situation, for example, in Korea, there are schools that have two bank accounts for you. One is a Korean won account and one is a US dollar account. And they'll tell you that 70% of your money is in US dollars if you're a US citizen or whatever. They have different ways to do it. And 30% will go into local currency. This is why that is amazing. You live off your local money. Maybe you even travel off your local money. You don't have to exchange it. You don't have to pay fees to get your local money into your home currency account. Um, and so what happens is you literally can take all of your home currency money and transfer it home every single month and work off and live off of the the local currency, in this case Korean won. Usually in these scenarios, your US dollar amount is guaranteed, regardless of currency fluctuation. That's what you're looking for. So the school is basically saying you're going to get $5,000 a month in US dollars. Don't worry about exchange rates. It's always going to be that much. You're not pegged against anything. You're not subject to market volatility. When contracts come back around, they might say, listen, we can't pay you as much because the market's shifted and we have all this inflation. And that's when that discussion happens. But month to month, you have a very stable and predictable amount of income, which is important. All right, next. You need to confirm your tax situation. Tax situations are often used to lure people to jobs. Good example. You work in the UAE, tax-free salary. You're like, oh, no income tax, no state tax, no city tax, and depending on the country you're from, you may not have to pay taxes back to your country, tax-free salary. That is true, okay? But there are things that pop up, and you start asking yourself, wait a second, you said there aren't any taxes, but it seems like my cost of living is really, really high. Well, that's because nothing is actually tax-free. Yes, you don't have to pay income tax, but you are paying sales tax, or you're paying a price, and that price has tax already figured into it. When I was living in the UAE, I was speaking to a guy who imported and exported vehicles. And I was asking him, if I go buy a new car, where's the tax? Am I paying a sales tax? And he's like, this is what happens. The tax for the car that you want is about 33%. So that is just factored into the total price. So you don't see it as a tax. So you are paying it, and it is actually 33% of the value of the car. And in this case, he said, they added all the fees for the import in as well. So they add all that in upfront and then tax that. So it's not like you're paying the flat value of the car, the tax, and then adding the fees. The fees also are taxed. And that actually makes the vehicle a lot more expensive than you realize. So there are taxes. I had a friend send me a receipt once after I'd left the UAE, showing me that after he had purchased something in a hotel, all the taxes added up to something like 40% of the bill. There were all these fees and things built in, and they were all on the receipt, and he sent it to me. So remember, nothing is actually tax-free. There is tax. You need to find it. You need to find where you're going to be spending money that you're not planning on. And every country, every situation has that. In some cases, you pay taxes locally, and they're fixed or flat, and that's fine. Don't say, I'm not going to work there. They're taxing me. You're being taxed because the money is going to a service, and those services can benefit you. Korea is a really good example. There's a moderate tax rate in Korea on income that you would pay as an expat. However, you also get really good medical benefits. There's maternity benefits. There's all kinds of things that you get back for that. So it's a good overall value. Don't just say, am I paying tax or not, and make a decision based off that. Also, tax brackets. China's a great one. I'll link this in the show notes. There's a there's always publications every year in China in English that show you what you pay at certain tax brackets. Some people pay very reasonable tax. Other people can start getting taxed over 20% of their income pretty quickly. You don't get a refund on that. And you're not paying taxes back to your other country. There's nothing. You're just paying Chinese government 20+% of your income. And in that case, you're probably not going to see any great benefits from that because your healthcare, everything you've done in China is actually through a third party. It's all considered like an international package. You don't really benefit from any of the tax. You're just losing 20% of your income. So every situation needs to be considered. The final thing is special terms with your home country. I have not encountered this, but I have an accountant friend who deals with expats. And after you listen to this, if you would like a reference for somebody who can help Americans or Canadians with tax issues, or maybe you messed up and you invested money in something you weren't supposed to invest in, whatever, you need help with taxes and money, I'm happy to refer you. This, my accountant friend, has gone through this with me a few times when I've been looking at jobs, and she has told me to be very careful because some countries have a tax agreement with the United States. And what that means is I'm not going to be exempt from taxes. I'm going to have to file taxes normally, and I'm going to be taxed basically at the same level I'm taxed in the United States. And on top of that, I'm going to have to pay money every year to have somebody file the paperwork because it's really complicated. This information is readily available. So what you want to search for, and I'll put this in the show notes, you want to put tax treaties and then the two countries. So like tax treaties, America, Germany, and see what you find. Additional income included. When you're looking at your package, you need to find out if there's additional income included besides your salary. Sometimes there are pensions, sometimes there are bonuses and stipends. Not housing benefits. Do not count housing benefits as income, even if they're put into your bank account. We will get into that later. That is a tax liability. You do not want to do that. Most countries require you to report your income, and when you do, you often have to report your housing as income. So ideally, you want the school just to pay for your housing. I know some people who try to run little scams with their housing benefits. I'm not going to explain those scams, but it's not a good idea. Pensions, though, you need to see how they're paid. So there are pensions in a lot of countries. In China, for example, they changed the rule a few years ago, at least in Shanghai, where your pension was paid at the end of every year. So you got a little bit of pension, and then you could work with it, transfer it home. In other countries, your pension's paid when you leave. So if you work there 10 years, you get a lump sum. However, the most important thing is to look at how that distributes. So you can't use the money immediately, but if you want to do an apples to apples comparison against the country that doesn't offer pension, then it helps to figure out, okay, if I'm getting $10,000 every year in pension, then divide 10,000 by 12, put that into what it would look like in your monthly income, and then compare that to monthly income you're getting from another country that doesn't have a pension. And that way you can see if the value is the same. Most pensions don't earn interest, so you should be able to do this fairly easily. Stipends and bonuses, the same. If you're going to be doing something extra and you're getting a stipend, as opposed to working somewhere where you're going to be expected to do that same activity and not get a stipend, you want to put it in and distribute it over 12 months so you can compare it month to month to another job. Additional income. Some people will take a job and they'll say, okay, I've researched this. I really want to live there, but with my salary and my pension even, I'm not going to make a lot of money. In fact, I know people who have taken jobs with a negative savings rate. So they work somewhere they really want to live and they're saving no money. They're losing money to work in a certain location. Their logic, I'm a teacher, I'm going to tutor. I'm going to get a second job, it's going to be fine. Because they did that in their home country, so why not? I mean, they feel like they have enough time, they're going to do a second job. Often, That's not legal. If you want to work somewhere where you need to earn extra income, you need to confirm with the school that it is legal for you to tutor or whatever else you want to do. And if it is, how it works. Most schools don't let you tutor your own students. Some schools let you tutor students in the school. Others won't let you tutor any student at your school. So you have to find your own tutees from other places. But it is often completely illegal for you to generate income from another source. Making a decision to move somewhere and trying to compare your package from job A to job B, and you choose job B and half of the salary you need is illegal salary, that is a mistake. All right, so that is part one, currencies, taxes, and income. We'll be back next week with part two. We're going to talk more about different benefits, different types of cash flow, how you do the calculations. And if you like this video, hit like and please subscribe. If you're listening on a podcast app, please go to the website and like the video as well.